Hey, this is Matt from InvestiQuant. Today is Thursday, January 13, 2022. Yesterday, the markets finished higher, but after the gap up from the early morning session, it really didn't make much progress. The markets pushed higher early on, then sold off, dipped down, making lows on the session, and then bouncing back into the close to finish about where it started, and that gave us a doji candlestick. A doji candlestick is where you open and close at roughly the same location. So that's what we're going to look at today, is what has happened historically following that doji candlestick pattern. Let me go ahead and grab all four instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, right now, we are trading right around yesterday's closing price, which was also right around yesterday's opening price. So instead of picking a gap direction, I have no idea which way it's going to go. I'm just going to use an opening area that says open within the prior day range. That looks very likely to happen at this point in time. So I've selected open in prior day range. The next thing I'm going to do is go into the price patterns library, and I'm going to select that doji candlestick. I can do that from the active today. Candlesticks day after a doji. I click on that. It is added to the test. It comes from the candlesticks category here. And then lastly, I'm going to put us in a similar market environment. We did close below the 10-day simple moving average yesterday, but above a 200. So I'm going to grab both of those and then click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when yesterday put in a doji candlestick that closed below a 10-day simple moving average but above a 200-day simple moving average, and then the next day you open within the range of that doji candlestick. Historically, we've got 73 samples in the S&P, we've got 97 in the NASDAQ, 75 in the Dow, 87 in the Russell. Win rates on these are coming in neutral to a bit weak, with the S&P being the weakest of the group at 44%. The NASDAQ coming in 53%, the Dow 45%, and the Russell 52%. If we look at the average moves, the average loss is larger than the average win on the S&P. That is also the case for the NASDAQ, for the Dow, and for the Russell. So although the win rates are not all that consistent, it does look like the more consistent moves have been on the sizable moves have consistently been on the downside. So the larger moves have happened on the downside compared to the upside, looking at the entire group there. But that being said, the win rates on them are pretty mixed. The S&P is the only one that's really getting a little bit weak there. The others are a bit more neutral. So bigger moves to the downside historically following that pattern. Hopefully you found that helpful. Good luck today. We'll see you next time.